Hello everyone, hope you guys are doing great. Hope you all are doing amazing. I welcome you guys to yet another edition in our channel. We're going to talk about our key levels. Okay, so this video is going to be a very powerful, short, straightforward video on key levels. Okay, there have been so many misconceptions about key levels. Okay, what is the right key levels? Is this support and resistance? How do I approach key levels? How do I mark out my key levels? And is key level even important? Should I consider it as my trading strategy and all of that? So in this short video, I'm going to talk about step-by-step guide how to mark out your key levels. Okay, so at the end of this video, after watching this video, always come back to rewatch this video. Understand that this video is very powerful. Now, to tell you guys the importance of key levels, initially I wasn't taking key levels very serious, but there was a particular incident that happened on Euro GDP that made me to start taking key levels very serious. Okay, and I'm going to show you guys that in a second right now. Okay, so let's go to Euro GDP. Okay, so this particular thing that happened on Euro GDP made me to start taking key levels very serious. Okay, and this was, I don't even like this I don't like this paper stone data feed, so I'm going to use CMC market data feed, or let me check Fusion. So always be very mindful of the kind of data feed you are using. Okay, so yeah, this particular incident on Euro GDP made me to start taking key levels very serious. You see this? Yeah, I wasn't taking this guy very serious as of that time, but I was like, when price got to this point, I took a buy from here and I placed my stop loss below this point on the lower time frame. I was not even on the higher time frame anyway. So what happened? Price hit my stop loss and then came below this key level. Immediately price tested this key level. That was the end of it. Price never came back again into this level. So you have seen the power of key levels. It's very powerful. So if you're not taking key levels very serious, after this video you will start taking it very serious. Okay, so let's go to the chart right now. I'm going to use Ethereum USDT to talk about key levels, and you're going to see how I'm going to mark it out for you guys. Okay, so the first thing you need to do when you are trying to mark out your key levels, okay, the first thing you need to do is to understand that you have to go from, for key levels, okay, for key levels we go from monthly to weekly to daily and to 4 hour. Okay, that's for key levels. And then for liquidity we go from monthly to weekly to daily, and then for entry we go on daily. Okay, yeah, so I know you guys will be surprised why I'm using daily as my entry. Okay, if you want to catch a sniper entry on the 1 minute time frame, on the 1 second time frame, you can catch it on the daily time frame. Yeah, so on another episode we want to talk about entries, on how to catch your lower time frame entries from daily time frame. This is a secret for you guys, and one thing I want to guarantee you guys is that whatever I teach on this channel is something that is very clear. Okay, and I want you guys that at the end of watching my video, you will understand some complex concepts that is very flawed over there. You can be able to understand it and know that this is the right way to approach it, and trust me, it will make a lot of perfect sense. Okay, so all your 1 minute time frames entries, you'll be able to catch them from the daily time frame. I promise you that. Okay, so in this video we're only going to talk about key levels and how to mark out key levels. Okay, so let's go straight to the point. Now for key levels we start from monthly, weekly, daily and 4 hour. Now for key levels we'll be looking at what? We're looking at order block. We look at order block, fair value gap and rejection week. Okay, we look at order block, fair value gap and what? And rejection week. So this is what we are going to be looking at: order block, fair value gap and rejection week. Okay, so let's just start. Okay, so right now I'm on the monthly time frame. So on the monthly time frame you will see that this is an order block. So you mark it out. You mark out this order block. on the monthly time frame. You mark it out and you extend it to the right. Okay, you mark out the order block and extend it to the right. Now this is when price came to this order block on March 24th or March 2024. Okay, you go down to the weekly time frame. What happened there? On the weekly time frame, you can see that there was an order block before that point. Okay, there was an order block here before that point. Now if you don't know about order block, I will release video again to explain you guys about order block and how to mark out order block. But order block consists of 3 candles. The first candle in the sequence is the order block. You can see 1, 2, 3. Now the center is the fair value gap, while the first candle is the what? Is the order block. It's as simple as that. Okay, so that is your order block. It's an unmitigated what? Order, meaning that price have not tapped into it. Is still very much fresh. Okay, so that is the order block there on the weekly time frame. And there's another thing that happened here on the weekly time frame, which is of course in the next video I will talking about liquidity sweep. So price swept the high of the previous weekly high. This tells us that there is possibility that price will trade what? Lower. Okay, now on the daily time frame, you can see that price also respected this what? Key level. Okay, and then what happened after that? Price traded below to this point. Okay, so let's look at this key level again on the higher time frame. Okay, now on the higher time frame, on the weekly time frame, you can see that this is an order block. Okay, so you mark out your what? Your order block. So you can see that in this instance I'm only using what? Order block. So order block is what you consider first before looking at fair value gap. So after order block, then you can look at what? For what? Rejection week. Okay, so after order block you look at for fair value gap. From fair value gap look at for what? Rejection week. I hope you guys are understanding. So the first thing is order block. Order block is the first, so you mark out your order blocks. Okay, and you start from the monthly time frame. If you check on the monthly time frame, there is no order block. You go down to the what? To the weekly time frame, and then to the what? To the daily time frame. So this is an order block right here, and this is also an what? An order block right here also. You mark it out. You can see that this is an order block. Okay, so when price was coming up, you can see that this order block has been mitigated. Since this order block has mitigated, you can see that the order block has mitigated. Now since the order block has mitigated, all we now need to now do is to wait for price to make an interaction with this what? With this week, which is the what? Rejection week. So we can now take the week. Let me go back again. I say the first thing is what? Order block. Okay, order block is the what? Is the first thing. The first thing is order block. Okay, order block is the first thing. After order block, we now look at for what? Fair value gap. And if price have mitigated the order block, mitigated the fair value gap, the last thing is what? The rejection week. So follow it in that what? Sequence. Okay, and it's very very important. So the first thing is order block. So you can see I've marked out all the whole order block here. So now let's go down to the weekly time frame to check that out. Now on the weekly time frame is still a rejection week. There's nothing happening there. Okay, let's go down to the daily time frame. On the daily time frame, you can see that that was what? A rejection week that happened there. Now when price came back there, see what happened here. We now look at for what? Order block again on the daily time frame. You can see this is an order block also. I say it consists of 3 candles, 1, 2, 3. The middle one is the fair value gap. The first one is the what? Is the order block. You can see that price tested that order block, and then we now came down to this point. Okay, so let's go back again into this point. Now you can see that between this candle and this one is what we call a fair value gap, and that is where price is right now, and below it is an what? Order block. So this is an order block right now. Okay, so let's go down to the weekly time frame. On the weekly time frame, you can see that this is a fair value gap between this candle and this candle. Is a key level fair value gap. Okay, and you can see that we can now refine this what? Order block. We can also refine this order block here. Okay, so and then let's go down to the daily time frame and see how that is playing out. Okay, on the daily time frame, you can see that this is the one that is still unmitigated here. And you can see that this is the fair value gap, and below that fair value gap is the what? Order block. And so this is the order block right here, and that is where price is right now. Okay, and you can see that before price came to this order block, this is another order block here. Okay, you can see. So this is the order block. Mark it as price respected that order block. There's another order block here if I'm not mistaken also. So you mark it out. Now, for a valid order block must have a fair value gap before or after it, depending if you are buying or selling. A valid order block. I don't know what you're learning out there, but I'm telling you right now, please take everything I'm saying here very serious. A valid order block must have a fair value gap before or after it. There has to be a fair value gap, and it consists of 3 candles. The first candle is the order block. The distance between the first and the third candle is the fair value gap. So that first candle is the what? Order block. Just as you are seeing right here, the first candle here is the what? Order block. This is the fair value gap between this candle and this candle. So, and you can see that price came there and reacted from there. How are you seeing how simplified this whole concept is? So they will tell you so many crazy things about order block, about key levels and rest of them, but then you can see how I've been able to simplify it. Go from the monthly time frame, move down to the weekly time frame, then refine it on the daily time frame, and then you can go down to the 4-hour time frame to also refine. But then if the order block is that small on the daily time frame, there is no need for you to over refine it again on the higher time frame. Then if you have gotten your key levels on the higher time frame, then you cannot be able to go down to the lower time frame to do what? To see how is playing out based on your entry. Okay, so I've marked out all the key levels here. You can see how price have reacted from all these key levels. Now in our next video, we'll be talking about how to validate this key level. You can see that when price came to this key level of order block, you don't just buy or sell. Yeah, you don't just buy or sell because price have come to a key level. You wait for what we call confirmation, and which in the next video we'll be talking about how to confirm a key level. How do we confirm that this key level price is going to hold? So in the next video, we're talking about how to confirm this key level. So the takeaway from this video today is to mark out what key level. So let's look at another pair again. Let's look at USDJPY. Okay, let's look at USDJPY. I'm going to hide all of this. Okay, I'm going to hide everything for you guys so that to not cluster. So let's go down to the monthly time frame for USDJPY. On the monthly time frame, you don't need to go to all the whole old price action, except probably price have been trading for a very long time and it has created a past record of price history. That's probably there's an order block, on 1990 something, 2000 something that price have not mitigated. That is when you can go back to start looking. I'm going to talk about that probably in a second. Okay, but then let's look at what happened here. Now this is on the monthly time frame. You can see that on the monthly time frame, let's start from this place right now. When price was coming down here, you can see that this is a rejection wick. Now on this place, let's look at what is going on here. On this place, this is not an order block. Why? Because this monthly candle is inside this huge bearish candle. So throughout the period of months of this candle, it did not contribute anything to the price movement. This monthly candle did not contribute anything. So this candle was inside this candle, so it is not a valid order block. You can see that price came, tap into it and then push all the way up. Okay, so this candle is not valid. Okay, now you can see that this is a rejection wick. Now a rejection wick on the higher time frame is an order block key level on the lower time frame. I will take that again. A rejection wick on the higher time frame is an order block key levels on the lower time frame. Yeah, I hope that enters. Okay, now this is a rejection wick. You can mark it out. So let's go and see how price respected this rejection wick on the lower time. So we'll go down to the weekly time frame. Okay, on the weekly time frame, what do we see there? We saw an order block here, and you can see that price did swept that order block. This is an order block. Price did swept the order block. So let's go down to the daily time frame and see what is going on there. Okay, on the daily time frame, let's go to this place. You can see that this is a valid order block. This one is valid. You mark it out. Okay, so when price came to this point, we now do what? We now validate this key level using what we call liquidity sweep. So in our next video, I'll be talking about liquidity sweep and how to use it to confirm key levels. Okay, I hope you guys are getting value from this video. Please, if this video is helping you, please like and share this video. I really appreciate if you can do that for me. Like this video, share it, subscribe so that you'll be able to get enough values from my channel, because I'll be releasing subsequent videos. I'll be teaching you how to break all these complex concepts all this crap I'm teaching you guys out there, I'll break it down for you guys to understand that this is the best way to do it. Okay, so you can see our price came there, respected the order block, and then traded all the way up. Price came back there again for the second time because there's an order block here on the daily time frame, and then price came there, tapped into this order block, and then we use what we call liquidity sweep to confirm that price is yet going to respect this order block. And you can see that price traded all the way up. Price came back again into this place and it created an order block, but then price did not actually came back again. Price did not come back again to this order block. Okay, price didn't come back again to this order block. Why? Because there was another new key level that price created here, which is the key level of order block, and then we use the concept of liquidity sweep to confirm that price is going to respect this order block. You can see that everything is well simplified, right? And then after those incidents that happened, their price did not come back again to this point. Now let's go back again to this point. What is going on here? You can see that this is an order block also. Price respected this order block and mitigated it. This is an order block also that price is here to come to, and very close. Price is very close to this order block, while price have tested this order block and it is coming back there again for the second time. Now an order block can be tested 2 times, an order block can be tested 2 times, okay, but the third time it may not really hold because it has been mitigated. Now if you check also, you can see that we have order blocks here, and then you can see that when price, you can mark out your order block on the daily time frame, okay, and then you validate it on the higher time frame. Okay, now that's a fair value gap right there. This is an order block. Consider price respected this order block. Okay, you can see this is an order block also. Now for the 2 days, these 2 days, this is not an order block. This bearish candle is the order block because of the fact that these 2 candles are inside the bearish candle. Okay, they did not contribute anything to the price movement. Look at it. Oh, let me check that very well. This could be a little bit tricky. Okay, did it take it out? It did not. Almost at the same point. So this is how the order block is going to be. Okay, that's how the order block is going to be, and then you mark it out to this point, and you can see that price have also mitigated this order block also here. Okay, and this is also an order block also, so you mark it out. So you will now use the concept of liquidity sweep to confirm that price is going to respect this order block. Of course, you need to also consider market structure. Are we breaking the highs and respecting the lows? Are we respecting the lows and breaking the highs? Okay, so this is the concept of key levels. Okay, so let's go down to the higher time frame. Now on the higher time frame, you can see that this week here is a rejection week. You can mark it out on the monthly time frame, but then before then you can see that this one here is what? An order block, right? This one here is an order block, and then price have come to this order block right here. Now you can see that this high is still very much what's available, so we now need to wait for this monthly candle to close to know if this is what a valid point that price is going to make a high for us to create a new low. Okay, so on the weekly time frame, what do we have here? You can see that on the weekly time frame there is no information in regards to order block or fair value gap. It is not clear. Okay, so we'll go down to the daily time frame. On the daily time frame, what do we see here? On the daily time frame, that is when we now saw that, okay, fine, we have this order block here that price have tested for the first time, and then this is also price coming there for the second time again, and then we have this order block also that price is here to react. You can see that how we've been able to simplify this whole concept right now, and for the fact that price have mitigated this order block, there is possibility that it's not going to hold again because price have already mitigated this order block. So the order block that is left now is this order block here at the extreme. That is what is now left for us to do, and the price could likely push into this order block and then give us that liquidity sweep on the monthly time frame to come back into this lows to take out all these lows. Okay, so now price trades from a key level towards a key level. Okay, price will trade from one key level to another key level, from one key level to another key level. That is how price will trade. Okay, so as price is moving to a key level, it doesn't just move straight. Okay, it creates what we call market structure. For instance, let me just explain that for you guys for us to round up this section. So let's assume that we have a key level here, and then we have a key level here. Okay, and then price have moved from this. So price will not just move straight. Price will do what? We move higher high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then lower low, and then higher low, okay, then low, a higher low, and then higher high. This is how price moves. So that movement that price uses to come to a key level is called market structure. That current movement of price into a key level is called market structure, because price objective could be we don't know, could be to mitigate this key level here. Price will not just move straight into this key level. Price will move in what? Higher high, higher low, higher high, higher low, to mitigate this what? Key level right here. Okay, so this is just to give you guys a broader overview of how price move in regards to key levels. Okay, now it is now left for us to confirm that this is where price is trading to, using the concept of liquidity sweep. So liquidity sweep gives us the confirmation that price is going to respect what? A key level. Okay, so I hope this video helps you guys marking out key levels. So when you're marking out your key levels, you follow this pattern. You go from the monthly to the weekly to the daily. Mark out your daily key order blocks, mark out those order blocks, mark out those fair value gaps, look out for that rejection week, mark them out, and then see how price will react from them. That is all you need. You don't need any other crazy stuff. I can go on and on and on and doing this. It's just the same concept. Now when price was coming here, now a lot of pieces, let me just hide this setup. In our next class, we're talking about harmony pattern series. We're talking about all of that, but then let's look at these key levels also. Now on this key level, right now, you guys can see that now price was coming to this key level. Okay, when price came there, I know that price is not going to roll, because that is not a valid key level. If you look closely, that thing is not what? A valid what? Key level. It's not valid because of the fact that there is nothing there. So I know that the next key level that price could trade to is this key level of what? Order block. And you can see that before price started coming down, there was an order block that price mitigated in the past. You can see that price mitigated that order block. You can check also, you can see that price also mitigated this order block. And if we even move this a little bit further, you can see that this is also an order block that price mitigated in the past. Let me see if I can do that clearly for you guys to see. Let me just see if I can be able to do that for you guys to see. You can see this was an order block that price came to mitigate on the higher time frame, and then when price tested that order block, you can see that order block has a fair value gap before it, and after price tested that order block, that was when price started trading what? Below. So the concept of order block is something that is very powerful, and if you understand how to apply it on your strategy and also how to confirm it, you will be able to make crazy profits trading your strategy. So you can see that price is moving aggressively to this key level, and then if that key level cannot hold price, you can see that price will trade into this key level and other key levels below. Okay, so this will bring us to the end of this video, guys. I hope you guys have been able to gain a lot of value from this video. If you still have issue on key levels, please, after watching this video, please let me know, and I'll be able to do another video to explain to you guys on how to go about it. So I love you guys, and I wish you guys all the best, and this will be all for now. And then like and subscribe to this video, and if this video helps you, please like my video. Don't hold it back. That single like is enough for me. It gives me that boost and morale to keep releasing videos like this. I hope at the end of this video you have understand how to mark out key levels right now. Please take key levels very serious so that you stop taking random trade on the chart. Wait for key levels to be mitigated and wait for confirmation before taking your trade. This should be all for now, guys. I love you guys, and then bye for now, guys.